Today we're going to cover why investing in real estate will outperform any other investment with very little risk and volatility. And on this piece of paper, we're going to do it in one quick shot. So customers are always coming to us asking us how they can get into investing into real estate and what they should do with their money. You know, most of us are in a 30 or 15-year product, and you're not really using that money to your advantage, right? We all know that the large banks out there that are holding these mortgages in that first 15 to 20 years are getting all of their money back plus some. And we all know we don't live in a house for longer than really 7 to 10 years, right? So how do you start deploying some of that equity that you have in your home, right? So let's just say this is your home that you own, and you bought it in the last couple years, because unless you bought it in the last month, you probably have equity. So most people that we're talking to right now have at least $100,000 in equity in their home, right? And so the question is, do I pay 26 mortgage payments a year and pay off that principal? Do I switch to a 15-year because I think it's going to save me a boatload of money and I'm going to own my house free and clear? I'm going to show you a simple strategy on how you can do that much faster than just chipping away at those payments, right? Like, I'm going to put an extra $500 into that principal, but you're really not changing it because most likely you're going to sell that property, and yeah, you're going to have a lower payoff, but I'm going to show you how you can start doubling, tripling, quadrupling homes. So you pull $100K out of your property and you go over here and you say, okay, now I'm going to look at a property that's $500K, right? So now let's just put the purchase price here because I'm drawing it twice so you guys understand. I'm buying a $500,000 property, putting $100K down, and I'm looking for this investment to turn about a $4,000 a month renter, right? And I'm going to tell you why I'm getting to that number, right? So when we look at this principal, interest, taxes, insurance, and your HOA, when you're putting that number kind of all in, we get to this magic number of $2,333, right? So your payment's $233. You're collecting rent, so that's roughly, we'll call it somewhere between $1,600 and $1,700 because we're doing this live, and you know me with doing math, times 12 years. That gets me a net revenue over here of $20,000. So if I'm looking at this from an investment standpoint, right, because we're comparing this to other investments, that $100K is giving me a 20% return on my money. But let me show you why this really, really starts to make sense, right? Because as you do this we take that number times 5 years, right? We're going to own this investment property for 5 years. So after 5 years, you can all do the math, it gets you back to your 100K. So in 5 years, you're back to 100K. In 5 years, at just 4% growth, right? Which is the lowest growth we've seen since 2008, right? 4% growth. Brevard County, by the way, last year, 19%. Certain zip codes, 37, 40%. We're seeing some crazy numbers, but let's just call it 4%. In 5 years, this property is now worth $610,000, right? But, and we'll write 5-year over here. In 10 years, you're now going to get $200,000 minus repairs. So I want to caveat that, right? There will be some repair costs in there. But in 5 years, this home is worth $745,000 year 10. And what you're going to owe on that property is $312K, right? So that gets us to a net number of $433 plus $200 minus repairs. Shouldn't be that much when we're talking these numbers. So we're talking about $633,000. So am I going to chip away at my mortgage payments and add an extra $500 in hopes that my principal is going to go down? I'm going to cash out on my little home nest egg over here, or am I going to take the equity out, deploy it into real estate, which we know super safe number 4%? Gets me $633,000. Now, the other cool thing about this is if this is netting you 100K, somewhere around year 6, realistically, with your repairs, you're doing it again. And then the next 6 years, you're doing it again. So imagine this number times 3. We're talking about a big number. Now you go pay cash for your multi-million-dollar property, and you have no mortgage for the rest of your life. So if this has added any value to you guys, or you want to dig deeper in this conversation, please contact me or my team to talk about real estate investing, and we're looking forward to seeing you at our next class.